Good afternoon and welcome to the THERACRYF PLC investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Dr. Hugh Jones, CEO. Good afternoon, sir.
Afternoon, Lily. Thank you very much for the introduction. And hello, everybody. Thanks very much for joining us at our full year results presentation and Q&A. Full year, of course, is the year to 31st of March. That's quite important when we get to the post period. With me here in London is Tony Heinonen, our Chief Financial Officer, and with us online, Dr. Helen Kuhlman, our Chief Business Officer. And with that, I'll move on to the inevitable disclaimer because, of course, we are a public company. So the usual disclaimer rules apply, and then we'll get straight into our mission. And that is to build a drug development powerhouse in what we call profitable segments. Those are areas of medicine that a small biotech can make a difference in. Profitable segments within two specific and we believe profitable areas of medicine. They are oncology, where we've always been, and very recently moving to behavioral brain disorders as well. A lot more detail on that to come. And please ask the questions as they appear, and we'll try and deal with all of them. So I'll hand over now to Helen first to talk to you a bit about how our strategic plan has been constructed and is panning out. Helen.
Thanks. So we talked previously about the imperatives for us during this period, and actually prior to that, like a number of biotech companies, it's imperative that we generate data, both clinical data and preclinical data, to advance our programs scientifically, that we get external validation of our technology with partners, both for commercial terms and for research terms. And we always look to seek commercial opportunities for the business, and that can be both out-licensing or in-licensing, and as we'll discuss with the post-period M&A activity, and all the way try and do this in the most cost-effective fashion for all of our shareholders as we can. So we'll go into this in a bit more detail throughout the presentation, but we have generated preclinical data through our collaboration with Erasmus in the Netherlands around GBM, and that's really supported the evidence we've seen previously with other collaborators in both patient-derived patient models of GBM and the effect of SFX01 in those models that we'll go into the detail of, whilst also with our partnership in Michigan around colon cancer, generating real insight into the effects of SFX01 in a different cancer indication. On the clinical side, we completed within the period our phase 1 healthy volunteer study, which was a reformulation of SFX01. So that's an enteric-coated solid tablet. And we showed there that it was absorbed as we expected, which is past the stomach, and that we could detect sulforaphane and its active metabolites within the blood of those healthy volunteers. And we are looking now to publish that data as a paper, and it's been written up ready for submission at the moment. Within the cash conservation side of this diagram, we've managed to extend our cash runway. So whilst generating that data, extended our cash runway through cash efficiency and also the fundraise that Tony will talk about later, so that we now have a further year cash runway than we had prior to this period. And of course, the M&A post-period activity, we assumed new assets in terms of CNS assets from Kronos Therapeutics that we'll also give more detail about, which was the culmination of a large duration of search and evaluation activity where we looked at lots of opportunities that we felt would align with the strategy of EVGen, now THERACRYF.
Thanks, Helen. So to give you then some highlights, specifics around the execution of the plan that Helen outlined there, in the period to the end of March, we got a grant, which we're very proud of, by the Netherlands government, administered by KWF, the Dutch Cancer Society. This is a peer-reviewed grant, so our data on SFX01 was reviewed by a panel of experts led by our leading neuro-oncologist Dr. Gertz at the Erasmus Medical Center in Rotterdam. And that's to cover preclinical, so more lab work, and an eventual clinical trial in patients with glioblastoma or GBM, the worst of the brain cancers. To remind you that the 5-year survival rate for this cancer still remains under 5%, and that the average length post-diagnosis of lifespan is 14 months. So it couldn't be a higher unmet medical need. The business piece of this is it's non-dilutive funding. So we've got a substantial project in total worth 1.1 million euros funded by the Dutch government. We provide drug and tablets that we've researched heavily in our phase 1 study. And we provide, of course, our own internal expertise on SFX01 into that project, which we do on a very frequent weekly basis. So we're very pleased with that. Helen, one of the 2 people in the company who led that grant from our point of view, along with Marjolaine Gertz. That started on schedule, and the really important thing to note is that they've already seen SFX01 working in cells donated from patients' tumours in the Netherlands. That's important because we've seen that in New Zealand through a collaboration we had a couple of years ago with the University of Auckland, and we've seen it in Italy with a collaboration that's still ongoing with the University in Abruzzo. So 3 different academic groups seeing the same thing. That's really important when you're doing research, triangulation, as you call it, seeing the same effect of the drug in radically different countries and patients, radically different patients' tumors. So good to see, and somewhat de-risking. 2 more steps to do there. That's to move to in vivo, in whole animal work, which is scheduled. And then when all of that is done, to do a thing called a window of opportunity study. That's to start treating the patient before they get surgery. Whilst the patient then goes into surgery, they've got drug, SFX01 in this case, on board. As we've said before, the surgery is to remove the tumor if it's accessible in the brain. And we'll be analyzing those tumor samples again for SFX01 or the sulforaphane and metabolites that generates, and looking at what it does in the tumor. Then radiotherapy will be applied, and we'll look through that window of what SFX01 is doing. It's getting in and what it's doing when it's in the tumor. So an exciting project for us, and very importantly allows us to conserve cash in a difficult world, and to get our clinical study funded externally in a non-dilutive way. Leading up to that, of course, we've characterized our new enteric-coated tablet, still a very important part of the plan, as you heard earlier. The full clinical study report is now written to a regulatory standard, to a QA regulatory standard, and that was done in volunteers, I should remind everybody. We confirmed the PK profile, pharmacokinetic profile. That means when you take the pill, it gets past the stomach. The time course of release of drug and metabolites is entirely consistent with the drug passing the stomach, not being broken down by that acid environment that the stomach contains, getting past there and releasing in a time course and an amount of drug which is completely consistent with an enteric-coated tablet working. Important thing is serious adverse events, or SAEs as they're called. There were none. That was important for us. There was 1 mild case, and all the others were medium case, and while the others were mild cases of adverse events, mainly gastrointestinal, actually exclusively gastrointestinal in their type. So very important, the formulation works, delivers drug past the stomach, produces no worse side effects than we've seen in other formulations. So very, very good result for us during the period, put together in a regulatory standard, ready for the regulatory work that's coming up. We saw evidence of activity of SFX01 in other cancers in the lab as well. These are models. They're tumoral spheres or little tumors grown on flat surfaces in colon cancer. Through a collaboration we have with the University of Michigan, that's paid for by the American Cancer Society and the University of Michigan itself, and indeed a project that was funded in Italy by the Italians in this rare childhood cancer of rhabdomyosarcoma. And that work has been extended from the work we reported in the last period through into in vivo work. And again, the drug seems to be doing something to make those cells, those cancerous cells, more amenable to being hit by radiation. So it works in its own regard. It also makes radiation more powerful by greater than you'd expect. Adding 1 and 1 together, you get a number greater than 2. That's synergy, and that's radio sensitivity, which we're very happy with, because radio sensitivity is one of the mechanisms that we think is working in brain cancer as well. So that's a lot of the technical data. More in Q&A if you'd like to just pop a question into the platform. We get questions on Stalicla, and when we hear, we'll let you know. I think that's our obligation and our desire. We're in discussions still. The discussions are constructive and they're amicable. They're technical and business. So we're having a technical discussion with them with a view to resolving this dispute between ourselves. We felt it was the right thing to do before going out into the market, raising money earlier on this year, to make it public that we were in dispute. The contract has a number of dispute resolution steps in it, and we're in the first step of that dispute resolution. And we're talking board level to board level with our partner Stalicla to get round the dispute that we've logged. When we hear, we will be sure to let you know. We want to let you know, and we will be obligated to let you know when we have a constructive resolution to it. I can tell you now that we're working very hard towards that resolution. Can't tell you any more. It's work in progress, but when there is something to say, we'll definitely say it. Some board changes in the period. I want to say thanks to Barry Clare for being the founding chair, who retired last September. I want to say particular thanks to Dr. Sue Foden, who stepped up to chair at that time and remains our chair. Barry retired. Susan Clement-Davis, another non-executive director of ours, retired in December, a little bit later. And thanks again to Susan for her service. Alan Barge, a long-standing non-executive, became senior NED for us. And I want to welcome again Tony Heinonen onto the board. We hired Tony in the last quarter of last year, and he became an executive director on the 1st of January. So Tony, proper public welcome. And so those are the board changes, the people changes that happened during the period. So I'll hand over to Tony now for his exposition on where we were financially during the year to 31st of March. There's been some more activity since, just to remind you of that.
Thank you, Hugh. So I think in summary, the headline really says it all. Financial performance was in line with our expectations. So as Hugh and Helen earlier mentioned, we have been very, very capital efficient this year. And you see here, post-tax loss, 3.1 million. So we reduced the loss by 900,000 by being more efficient, yet delivering data, both clinical and preclinical. In a cash flow, same applies here, 1.5 million less cash outflow from operations compared to the prior period. So very, very cash efficient here, which leaves us now at the end of March with 2 million pounds of cash. And this one excludes now the fundraise that we did earlier this year. And I will talk a little bit about the fundraise and the impacts of the fundraise in the following slide.
Thank you. So over to Helen and Tony to do a two-person review of the post period. That is the days after 31st of March, which were actually even more transformative than the GBM grant in the Netherlands during the period. So over to you two.
So the acquisition was really the culmination of a prior 12 to 18 months activity, looking for M&A targets, as I said, to complement and enhance the existing EvGen pipeline. We looked at a number of opportunities within that, both in the oncology and CNS asset side. And we ultimately acquired post-period Kronos Therapeutics and its pipeline, which was neuropsychiatry portfolio. And we will tell you a little bit those assets when we go on to talk about the pipeline. We believe with the resurgence of interest in neuropsychiatry and CNS development, that this was a really good opportunity for us to, as I said, diversify and rebalance the risk profile of THERACRYF's current pipeline, which was mainly on one asset, the SFX01 asset. And they had very good package of preclinical evidence behind them that would allow us to progress them through IND enabling. Those indications primarily in substance use disorders, so addiction, anxiety, and fatigue or apathy, which were really exciting areas for pharma M&A activity in its own space.
And with that, with the combined company, we also renamed the company. So THERACRYF, Thera is Greek, Kryf is Welsh. Thera means healing, Kryf means strong, so strong healing. We thought this would represent the company, the combined company, the portfolio, the extended portfolio in a much better way. So we have renamed the company effective 26th of April, including the new ticker change on the AIM, as well as combined that now with the £900,000 fundraise, which we conducted in April, including a retail offer, and management and board invested about 10% of the raise. And here is very important to note that all of the senior management put their own money in. So we are all vested in the company in line with the shareholder interest here. And with this, currently we have a cash runway until the end of 2025. And if we compare that to the market and other publicly traded companies in Europe, RX Securities released a report on May 10th. And if we do the ranking over there in terms of cash runway in months, we are and remain in the top third of European listed biotech companies. So that puts us in a comfortable position in cash. And with that, next slide, please.
Okay, great. Thanks, Tony. Just to re-emphasize that, top third of all European listed biotech in terms of months of cash runway. This is one of our key planks. It was there in the strategic plan. We've executed on it twice now. That is, in the year to the end of 31st of March and post-period, we've executed again to make sure that we remain one of Europe's best funded companies in terms of months of cash runway. And we do this with great capital efficiency. We're a semi-virtual company, and we rely heavily on academic collaborations and on non-dilutive funding for our portfolio. And that makes us a very capital efficient outfit. So with that, I'll turn to the outlook after the post period. So the things we're currently working on and will be publicizing, of course, in addition to anything further on the Stalicla dispute and its resolution. We're working very hard on the regulatory work in manufacturing and the approvals that will eventually come through the EMA for our GBM glioblastoma clinical trial with the Erasmus grant. There's a lot of work to prep SFX01 results of the phase 1 study, all the characterizations we've done there to get it ready for regulatory permission to put it into patients with GBM. And that work will go on throughout this period, this year, and into the next financial year as well, into 2025. We are about to, and we'll continue to do that, complete the integration of Kronos Therapeutics. We've done it very quickly, we've done it very efficiently, and there's some more completion items to do, but we're a bit hot on the heels of getting that done as quickly and efficiently as possible so we can get on with the job of developing drugs. With funding we've got non-dilutive funding, as you know, for our SFX01 clinical program, and we'll be looking to do a non-dilutive funding through different grant mechanisms for the orexin and dopamine uptake inhibitor programs that we've just acquired. So we'll obviously release that information as soon as non-dilutive grants, if we succeed, come to pass. There will be more patent flow both on SFX01 and on the From Kronos programs. And as, again, those patents are granted, we will be making them public. We're going to publish our phase 1 study. We think we lead the development of sulforaphane-based medicines. We're the only clinical grade sulforaphane-based medicine in the world. And we've moved the field onwards substantially through that phase 1 study that we completed in the prior year and finished the reporting and QA work in the immediate year just past. And we're publishing that in a peer-reviewed journal. And as soon as it's published, clearly we'll make it available. There is more work ongoing from that population of volunteers, healthy volunteers, I should remind you, from that study, and it's called pharmacodynamic data, or PD data. We analyzed the entire genome of those volunteers in all the dose groups and against placebo to see what the drug was doing to gene expression through a technique called RNA-seq, or looking at what genes are signaling upwards or downwards on drug, before drug, or on drug against a dummy placebo. That analysis is ongoing. We're working on it now very closely to figure out what that means for the biology of sulforaphane, even in healthy volunteers. So over to Helen to talk a little bit about market dynamics and what we've been doing.
Yes, so we have been in the area of neuroscience with SFX01, particularly glioma, and with our partnership with THERACRYF, having that interest in neurodivergent disorders and CNS more generally. With the acquisition of Kronos, we come into what's now become, again, as biotech and pharma go through cycles of activity, a hot space in neuroscience. And what gave us even more confidence in taking on those assets was towards the end of last year, a number of pharma who'd actually been outside of CNS had their interest reignited and stated very publicly that they were bringing CNS programs back into their strategy again. I mean, J&J being one of them. And then that culminated in a number of very high profile and high worth deals at the end of Q4 2023. If I bring your attention to the Karuna one here, which is a 14 billion deal, and AbbVie, which is at the left side of the screen, which was an 8.7 billion deal. These were all neuropsychiatry programs. They were all clinical space. And what that really does show us that with the assets that we have and the indications we're looking for, we would get good traction with commercial partnerships with them, and actually unlocking those clinical aspects of those programs would really upweight any potential commercial deal that we could get from them. So I think it's, as I said before, things come back round in cycles. You know, during COVID, everyone was very interested in antiviral and vaccine technology. I think oncology in particular is very competitive and slightly oversaturated in some areas. Must add, not GBM, that's still patient need is very high there with lack of development candidates. But CNS looks a very, very exciting area. Looking post-COVID at some of the neuropsychiatry challenges that people are facing, especially in terms of anxiety, which we'll talk about, and some of those fatigue indications. I think this is a really current area that we're operating in, and we're all very excited about the opportunity it provides the business.
Thanks, Helen. I'll do the first half of this. It's a complicated chart. It's a complicated chart because we now have, a very rich pipeline for a small company. As you know, we have data in breast cancer. That space is getting increasingly crowded and complex. So the next study, if we were able to do it, would be many tens of millions. So it's a complicated, difficult space, but some interesting data for SFX01 there in the clinic and subsequently in preclinical experiments. Neurodevelopmental disorders is taken care of by THERACRYF, and that covers autism spectrum disorder, their first researched indication. SFX01, as you know, is also in glioblastoma, and those are the three centres there on the right-hand side of that slide that we've dealt with academically: Auckland, the Abruzzo and Erasmus Rotterdam centres, having seen complementary data from each of those centres in the test tube, de-risking, I think, perhaps some of that programme from a point of view of effectiveness in the clinical trial that's coming up. Rhabdomyosarcoma, we've also talked about, thanks to our collaborator in the University La Sapienza in Rome, where the drug, again, as it does in models of glioblastoma, sensitize those cells to radiation again. It's an incredibly important thing because for children with rhabdomyosarcoma, radiation is the only treatment option for them. And after 2 or 3 cycles of radiation, the radiation becomes less effective or even ineffective. So if we were able to do a pediatric development plan, and I emphasize this is not in our current funding plan, if we were able to do it, we would go into that rare childhood cancer because of the extreme unmet medical needs and therefore the market potential of a drug in rhabdomyosarcoma, turning on radiation once more. So some exciting stuff on SFX01. Internal program lead is glioblastoma, the most fatal of the brain cancers. The stage 4 has about 3.8 people for every 100,000 population, so it's not that rare, but it is an orphan condition. We have orphan drug designation already in the United States for this program and for the drug. Average survival is short, and the 5-year number is low. It's poor. It's as bad as pancreatic cancer and the other very severely fatal cancers. So we are both excited and optimistic about our chances in glioblastoma, and we've done it entirely through non-dilutive funding. So with regard to the post-period ones in the different colour there, I'll hand on to Helen, who with Tony actually concluded that transaction.
So with the acquisition of these programs, we now have two what's called novel chemical entities. So we have an orexin-1 antagonist and a dopamine reuptake inhibitor. The orexin-1 antagonist is targeted towards aberrant reward mechanisms and the dulling down of that aberrant reward-seeking behaviour. So the indications of interest are in addiction, so substance use disorders, and we have preclinical data in binge eating disorder and anxiety, in particular panic anxiety. And J&J showed some early data on a tool compound in anxiety, both in an animal and in a healthy volunteer-induced panic model, where orexin-1 antagonism had positive effects. So we will be doing a prioritization of indications that we believe that we will have the best opportunity going for, both scientifically and commercially, and of course be looking for that non-dilutive funding to take them forward. For orexin particularly, we've been in conversation with some key opinion leaders from King's on how a collaboration might look, and getting their input and advice into going forward in some of these particular indications and what the development pathway would look like for these programs. So for the dopamine reuptake inhibitor, so we often say this is an atypical DAT antagonist, and that's really key. So a lot of compounds that target this mechanism cause a flushing out of dopamine, and that gives you a high, an amphetamine-like high. But this is a very selective transporter compound that prevents a reuptake of dopamine, but not causing a flushing out of dopamine. And this gives a gradual alerting. So it gives that sort of gradual alerting relief and to overcome your fatigue or your apathy, as the Americans like to call it. And we have both preclinical evidence here in a number of fatigue-based models with our collaborator, John Salamone at the University of Connecticut in the US, who's a leader in this area, and also animal model of narcolepsy, which is an orphan disorder. So we will primarily look towards getting orphan drug designation for the compound in narcolepsy, and also for, as we said, non-dilutive funding to take these both these compounds further through the what's called the IND enabling process that gets them then ready to go into the clinic.
Thanks. So this deals with one of the questions, but the management and board of THERACRYF are constituted now after a couple of retirements, like you see here. There's Sue Foden there to put a face to a name as our chair. Lower down, Dr. Alan Barge as our senior non-executive director. As part of the deal to acquire Kronos, their shareholders, which are now our shareholders, have the ability to nominate a non-executive director. That's not yet happened, but we'll release it obviously as soon as it does happen. And then a few people in the C-suite, as it were, Nick Mallard, who heads our project management, manufacturing, and other project management activities, Helen on the screen. And another important person in this team is Dr. Glenn Clark, our chief medical officer, who with Helen achieved the grant in glioblastoma in the Netherlands. So I should add that the small raise we did in April, post-period, this group of people contributed 10% of it, which is a question that's come up. So we, between us, collectively raised £1.10 of all the money we raised at that point. We remain committed to it. Another point that's in the RNS issued this morning is that management this year have foregone a cash bonus. Cash bonus is part of their contract. It's discretionary, of course, depending on performance of objectives achieved in the company. But everyone, to a person at senior management level, have said, no, we'll keep the cash runway. That's the key imperative for us. We'll defer the cash bonus into an option scheme instead. So that further aligns management and board with the investor interest. That is, we're not taking cash out of the business. We're doing it in a share instrument instead, further aligning us with the interest of the shareholders. And I just want to say publicly to commend the senior management group for making it so easy for me to ask them to defer their bonus into an option scheme and to get that further alignment. It was a very easy conversation. It tells you a little bit about the commitment of management in this little virtual company. So a transformative year for us. That's the last of the formal slides in about 30 minutes. Non-dilutive funding, getting us into the patient in glioblastoma, much more characterization, definitive work really on SFX01 in the new enteric-coated tablet in our volunteer study, written up to a regulatory standard, QA'd and completed, will be submitted for publication. And post-period, we've got a massively expanded and very risk-adjusted portfolio in areas that we as management, and indeed sort of Big Pharma, believe are areas of high unmet medical need. And when you get to the mid to late stage clinical, the opportunity for massive accretion is not in the millions, the hundreds of millions, but in the billions, it seems, when these CNS companies are acquired by Big Pharma who've woken up to the value of brain diseases once more. So that concludes the formal part of the presentation. I encourage you to submit questions. I've got a couple here on screen that I'll now move on to, if that's okay. So the first one is it's two questions in one, really. Has the dispute with Stalicla been resolved, or will the company be dropped? Well, as we've said, we're working very hard on a board-to-board level series of discussions with Stalicla board and management to resolve the dispute. When we hear something, when something is definitive and agreed, we will let you know. So that's that one. Are the board of directors, second part of the same question, still continuously barred from investing? Well, no. I mean, the Kronos deal took, a year plus to conclude. Because a major M&A activity was on the cards for the entirety of that period, we said repeatedly, sorry, we can't buy at this point. And we couldn't. Our advisors were very clear on that subject. As soon as the window opened for management and board to buy, we did exactly that. We bought 10% of the shares that were bought during the raise concluded in the first week of April. We're now in receipt of other information, of course, particularly our toing and froing on the Stalicla dispute and information on expressions of genes in volunteers. So we are in receipt, I think, of potentially important information as a board and senior management. But I hope so that answers your question. There's a second question which is related. Can we provide investors with more information about the Stalicla findings published in the 8th of May, a characterization of clinically and biologically defined subgroup patients with ASD? That is good news, of course, because our partner Stalicla have published on the success of their platform. To give you a bit more background on that, that platform divides the autism spectrum disorder population into two. That's ASD type 1 and ASD type 2. The publication covers ASD type 1. That's the group of people with autism that our drug is less likely or unlikely to work in. Phenotype 2 or autism type 2 is the group that they've selected for studying SFX01. They've used some laboratory chemicals for that some years ago. They've also used SFX01 in their own laboratory in the south of Europe. And we've shown very profound effects in the lab in some of those samples. The publication, the second part of this question is, did we not consider the publication worthy of an RNS? Well, actually, we're pleased that our partner has published. We're aware of this platform. It's a big part of agreeing to do a transaction back in 2022. But it covers a group of autism patients that we are less interested in, if not interested in. But it is a yin and yang. So if it's working in the group that we're not going to work in, it validates the platform that helps identify those people with autism that we are going to work in, at least according to the literature. So we didn't think it was RNS worthy. We did think about it. We did discuss it. But it covers a different group of patients to the group that we are interested in and that's material to us. So hopefully that covers your question there. The share price. Well, yes, that's thanks for that question. The share price is a macro effect, right? We've got two regional conflicts, major regional conflicts. We've got an oil price that's been up and down. We've got interest rates that are, again, at very high levels compared to historical levels. And those are the macroeconomic factors that affect the whole sector. If you look at a dashboard of comparators that we have, they're all behaving in the same way. And that way is not really reflecting the inherent value that's in the AIM listed and indeed the NASDAQ listed biotech sector. We believe this is cyclical, where we're continuing to do what we believe to be the right thing, and that is to develop drugs that hit high unmet need, profitable segments in areas of medicine that have those with low competitive intensity and the potential to make very substantial gains over time. This is a long-term gain. It's an R&D business, so R&D takes a long time, particularly in the biotech space. All we can ask for is patience at this time when the market overall is behaving in exactly the same way. Dilution is a fact of life in biotech. Thank you, sir, for making that point. It could have been rather more dilution. We try to keep the capital efficiency very high on our agenda and get our non-dilutive funding, which we've got a good track record of, as high as possible as a proportion of our R&D spend. But dilution is sadly a fact of life until such time as non-dilutive gains come in through transactions, or indeed through academic collaborations, which we're pretty adept at. We've been asked to say a bit more about the collaboration with King's. We've just started that with Professor Alan Young, who is a professor and head of department, has a preclinical and clinical practice, as well as being a practicing psychiatrist in King's. We don't have a structure for it yet. It's a series of discussions about how we might move these programs forward in a non-dilutive way. We all agree that the programs we've acquired have got a very high unmet medical needs, whether it's in the impulsivity addiction space or in the anxiety space. And we all agree on that. And we're using our academic collaborators in choosing the path forward. That piece of planning is being done right now. We're choosing the path forward for these neuropsychiatry assets, and then in parallel looking for non-dilutive money to deliver those programs. There are lots of sources of non-dilutive funding in America, from the National Institutes of Health, for example. There are European funds, like the European Infrastructure Grants. There are Innovate UK grants that come up and down, pop up every now and again. So we're looking at the entire market from that point of view, and that activity has just started because it's only 6 weeks since we closed the transaction. So quantum of, very good question. How big a non-dilutive funding are you looking for? The history here of non-dilutive funding of these sorts of programs, we're looking for funding to take us through these things called IND enabling studies. That's many millions. That's to do the long-term toxicology and scale up of manufacture required to get us into volunteer studies. So that's the first step of non-dilutive funding. And there is precedent as well on orexin antagonists, where non-dilutive funding goes beyond that into patients or people with neurodivergence or neuropsychiatric disorders and addictions that come with them. So there's good precedent, and we're just starting on that journey. So more when we have it, I think, would be the summary there. So funding will start to get us into the clinic, and that clinic will be in volunteers. There are these things called experimental medicine studies that we're intrigued by. So an experimental medicine study is to kind of emulate in a volunteer, usually a healthy young male, of a kind of psychiatric condition. So there's one, for example, in the panic anxiety area. I'm not saying we're going to do this, but it's one of the ones we're researching. And as Helen mentioned, J&J have published on this model. You make volunteers inhale CO2, carbon dioxide. It triggers a panic reaction, a bit like not being able to breathe. It triggers a whole bunch of chemoreceptors in the cardiovascular system that then relate up to the brain. And if you make the volunteers inhale CO2, you can then pre-treat them with a drug, a research stage drug like an orexin antagonist, and look for reduction in those symptoms that they report. And that's been successfully done in the past with anti-anxiety and anti-panic programs. So we're looking at a lot of those kinds of ways of traveling forward to get proof of pharmacology, as we call it. That is, proof that the drug is interfering with pharmacology, even in healthy volunteers. We got that with FFX01, we think. And because there's a huge literature on sulforaphane, and we're looking to emulate those because you get a readout, a pharmacological readout earlier in a volunteer study than you might do in a full-blown patient study. Did large existing shareholders didn't participate in the raise? Well, I mean, one of them did, of course, the first one in. The largest shareholder in Kronos Therapeutics Limited, as a private company, also participated substantially in the raise. A lot of the feedback we got from the existing shareholders were really about policy decisions for them. We believe that in this high cash interest rate environment, there's been a general shift away from biotech investing, and we see that across the sector. I'm not going to tell you what our benchmark companies are.
And globally as well.
Globally, thank
not
you.
only here.
Yeah, Tony has a lot of experience of NASDAQ companies, both North and in the United States. So it's a global phenomenon, as Tony said. So we've had from certain investors policy decisions repeated back to us. We like your management team, would be one of them. We like what you do with capital efficiency, but we're not, as a policy, not investing in non-revenue right now. We've had several of those pieces of feedback. So I'm afraid it's the market and the policy decisions. I'll reiterate again, we're doing the right things. We're acquiring against the market norm. We are developing with non-dilutive funding and being as capital efficient as we possibly can, including with our own rewards as managers in the business. So I hope that answers your question. I don't see any more questions popping up.
I think, Hugh, there was one that wasn't answered, but it's all the questions have disappeared off my screen now. But it was one about data. So in a academic collaboration, who owns the data? Of course, if it's a commercial use, we own it. So we have a construct where, obviously, when you're collaborating with an academic, they will have the ability to use the knowledge and the outputs generated for that in education research purposes. And we have to try and facilitate publication. Obviously, publication is in our interests as well. But when it comes to commercial purposes, that's owned by us specifically when it's, let's say, to do with SFX01, and we have patents that cover that compound anyway. But if it's new generation of IP, so if we manage to jointly generate something new of interest, then we go into that together with the collaborator and jointly own that. So yeah, sorry, I hope that answers the question because I can't see it on the screen anymore, but I think that should cover it.
None of those rights on SFX01 are given out yet to any other parties apart from the party we originally licensed that from. So there are agree clauses in some academic collaborations that were brand new intellectual property is generated, but mainly we rely on our own IP for SFX01, and it's more of a kind of fee for service or joint collaboration, and we help them publish where we can, because the language and currency of the academic world is to publish as much as possible and publish in as high impact a journal as you possibly can. We've got another question here. Is there an opportunity to list on NASDAQ North? Well, I think I'll relate to the expert on NASDAQ North here in the team.
Yeah, so NASDAQ North, I mean, I suppose you mean here NASDAQ North being NASDAQ First North, which is Helsinki and Stockholm combined. We are not currently planning to list over there. There's no reason why we, as a UK-based company, would list in a Finnish or Swedish stock exchange. It was a different story for my former employer that was based out of Finland, of course. Regarding the NASDAQ listing, if you look at US NASDAQ listing, I mean, very rarely in the last couple of years European companies have listed at the NASDAQ in the US, and has two reasons. It's a massive cost. I mean, listing at the NASDAQ in the US, we're looking at minimum 3 to 5 million of cost, which we don't have. We'd rather spend the money that we have currently in driving our programs forward. We think it's better use. And then if you manage to list there, last year there was only one called Abivax, a large French company backed up by Sofinova. I mean, they have listed over there. Their stock hasn't been performing so well in the post-dealing. So we don't think at the moment, listing in a NASDAQ in the US is a viable option for our company or would make any sense for the shareholders.
The headwinds that we're sailing against are the same headwinds globally currently, because we've got a couple of regional conflicts that are global in their impact, and the interest rate effect and the fuel price effect of those things, although it's coming down now, are still there. So NASDAQ's not performing great either. The grass is not greener currently, either at NASDAQ Nord or indeed NASDAQ US. NASDAQ tends to start the ball rolling when there's a recovery in these cycles, and I've been around long enough to know 3 of these cycles. When the recovery comes, it starts from the west and moves to us a little bit further east, and then again to
I
the
think
north.
the first part of that question, because it's sort of a two-part question, one is about merging. So I think we're always open to looking for opportunities for M&A, and that might be us merging with someone already on NASDAQ. But I think, you need a good combined opportunity, combined valuation that's substantial enough to be able to generate good price, I think, is probably to keep your market value up. And for us, we would need to merge with another entity that had good, quite advanced clinical stage programs, or for us to get to the point where we had mid-stage clinical programs for multiple of our assets to give ourselves a good market cap on a listing such as NASDAQ.
Exactly. And I think it's important to note that, the grass is not green on the other side. So at NASDAQ in the US, we're looking, there's probably about 150 companies trading below cash. So, it's not better than it would be here. And then, of course, running a NASDAQ listed company, it requires a much more, robust and larger infrastructure. So it's not very cost efficient. If you look at the performance of the stock over there, there's an index called XBI. From the peak days of COVID, it has come down about 50%. So it's about 85, 88 this morning. It used to be about 160 in the peak days, and it has not recovered in the last couple of years. So we don't think from a valuation perspective, it would do us any good in being there versus being an EA.
I think we wait for the environmental headwinds. We manage this business as capital efficiently as possible, with as much non-dilutive funding as possible, and then let the data speak for itself. Our game is to generate compelling sets of data, either preclinically or, better still, clinically. And that's our game. And we've created with SFX01 a plan that gets us there. We are in the process of creating that plan with the orexin-1 antagonist and the dopamine uptake inhibitor that we've just acquired through Kronos. So that's the route, I think, to value accretion here. That's the route to value accretion in any biotech. Another question is coming up. Could you have raised more this time? If so, why didn't you? I think we raised as much as we could, given the environment in that week of the end of March to the beginning of April. We're conscious of dilution. I would have taken in more, frankly, but we're very conscious of dilution. That's an area that many people on this call have raised with us. So conscious of dilution, conscious of getting the balance right, and not having to raise money at too punishing a set of terms. So we did the best we could. We are aware that several other companies tried to get out there and didn't raise a penny, even though they had all the expenses associated with a raise. So now it's about extending cash runway, which we've done by another year, as efficiently as possible. We'll run the business as efficiently as possible and try and bring in those non-dilutive funds to push the data sets forward. Okay, I'm not seeing very many more. So I'll hand back to Investor Meet to conclude this webinar.
Hugh, Tony, Helen, thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet company platform. Just before redirecting investors to provide with their feedback, which I know is particularly important to the company, Hugh, could I please just ask you for a few closing comments?
Thanks, Lily. Well, you've heard everything we've got in the cupboard at the moment, which is a lot more than we had even 6 weeks ago. That's a culmination of many, many months, if not years of work, both in planning, in assessing the market, and finding one acquisition. In parallel, we've executed on our strategic plan, which is to get capital efficiency and non-dilutive funding in to take these programs forward as quickly and efficiently as possible. I thank you for being patient with us. I think everybody has to be patient in this current market. I think we're proud of the fact that in months of cash remaining, we're still in the top third of all European listed biotechs. So please hang on to that fact. It's easily supportable by an analyst group here in London. So thanks for your patience. Thanks for hanging in with us. And we'll release all information as soon as we have it. Thanks very much.
Hugh, Tony, Helen, thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of THERACRYF PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.